Welcome to this edition of Tiger Trade Weekly for Friday the 22nd of March. My name is Greg Boland of Tiger Brokers, and each week we look at the US share market, what has happened this previous week and what is likely to be happening over the week ahead. This week the Federal Reserve met and their announcement came out yesterday morning, Thursday morning New Zealand time. They kept rates the same as predicted. The rhetoric and momentum of future rate cuts are the market's primary focus, and the Fed did not waver from their previous announcements. The Wall Street Journal produces a side-by-side comparison of the Fed's statement from one meeting to the next. The only change in the Fed's statement this time was the job gains remained strong following the recent non-farm payroll numbers. So last time the Fed said job gains have moderated since early last year. This time they said job gains have remained strong. So that was the only change in the FOMC statement. The other key release is what has become known as the dot plot, which plots each of the 19 Fed officials' projections of where interest rates will be by the end of each year. The dot plot is updated every 3 months, so the last time was in December and now in March, and is meant to provide insight into the Fed's future rate decisions, with the caveat that the Fed rates can't always predict the future. Officials signalled in their latest projections via the dot plot that they continue to predict 3 rate cuts this year. So if we look at the dot plot itself, we can see that the current rate is just under 5.5%, and by the end of the year, 9 officials see that the rates will be cut 3 times this year. Yahoo Finance have provided the following comparison between the December 2023 and the March 2024 dot plots. 17 officials predict a rate cut this year, while just 2 see no cut. Notably, only 1 official sees the Fed cutting rates by more than 0.25% this year, compared to 5 officials thought that the rates would cut by more than 0.75% by December this year. No official see rates hikes higher in 2024. So we're looking at this comparison between December 23 and March 24 that Yahoo Finance has produced. We can see that now 9 officials see rates falling by 0.75%, whereas only 6 did at December last year. 4 last year thought rates would fall by more than 0.75, by a whole 1%. Now only 1 official sees that. Interesting, 2 officials still see rates staying the same for the remainder of the year. Time will tell which is correct. So while the Fed does provide these the statement and also the dot plot, they do not actually indicate when the 3 rate cuts will occur this year. One way of looking at it is that the CME, the Chicago Mercantile Exchange, produce a daily Fed funds futures predictor of where rates will be at the Fed's meetings in June, September, etc. And they are showing that people predict that the rates will be cut in June, September and November. I still think that's probably a little bit premature. My own prediction is that rates will drop in July, September and November, so 3 times this year, but it won't start till the third quarter of the year. So what does this all mean to markets? Well, markets love certainty, and the S&P rallied after the announcement to a new all-time intraday high on Wednesday afternoon US time, and rallied into the close to a new closing high of 52.24, up nearly 0.9% on the day. The index continued to rally higher on the Thursday session. VIX, which is the fair gauge, the Chicago Board Options Exchange Volatility Index, it has fallen since the Fed announcement. by more than 6%. The S&P 500 is now up 27% since October last year, and the Nasdaq is up 31%. This certainty in terms of future rate cuts is a good barometer for the market, and the market likes certainty. In other news, the most discussed stocks on the Tiger Brokers community to the moon continue to be Nvidia and Tesla, with the Chinese internet retailer PDD Holdings now edging Apple out of third place. So the most discussed stocks are Nvidia, Tesla, PDD Holdings, Apple, Alphabet, Neo, and Advanced Micro Devices. Thanks for joining us, and we look forward to seeing you prior to the Easter break.